Hi, everybody, and welcome to the Buffett and Beyond Stock Analysis Video Podcast with your host, Dr. Joseph Belmonte, which is me, and Debbie with a Y. Hi, Debbie.
Hey, hello.
And all these methodologies are based on the book Buffett and Beyond, second edition by Dr. Joseph Belmonte and published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. Now remember, folks, the clean surplus return on equity is both a comparable and a predictability model and is totally different than the traditional accounting return on equity. So don't get them mixed up. And you can equate the clean surplus return on equity as the interest rate you get from a bank. So this is common sense now. A bank account with a higher return or interest rate will earn you more money than an account earning a lower interest rate. So it just follows that portfolios made up of stocks with high clean surplus ROEs or return on equity will outperform other portfolios made up of stocks with lower return on equity or interest rate. So think of your bank account when we talk about these stocks. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. And today we're going over a stock in the healthcare information industry, and it's our old friend VEEVA Systems. And that stock symbol is VEEV. And VEEVA Systems is a global provider of industry-specific cloud-based software solutions for the life sciences industry. The company's solutions enable pharmaceutical and other life sciences companies to realize modern cloud-based architectures and mobile applications for business functions. Product solutions include VEEVA CRM, VEEVA Vault, VEEVA Network, and VEEVA Data and Data Services. It employs about 6,744 people, and that's about 1,000 more than when we last reported on VEEVA Systems. Now, let's look at the clean surplus return on equity, and we can see that it is certainly above the 20% threshold that we require to get into, or for most stocks to have, into our growth portfolio. And the ROE has been declining a little bit, but for 2024, they expect a $5.25 net income. And remember what net income is. It is the clean surplus earnings. If you take traditional accounting earnings, subtract away the non-recurring items and the future liabilities, you come up with the clean surplus net income, which is the clean surplus earnings. So I want you to look at that every year since this company has been formed. The net income is going up and going up at a very, very nice rate, averaging about 23%, 23.5% over the past 5 years. Very, very good. Now, the average stock is growing about 12 or 13% a year, so this is almost double the average stock out there. Revenue growth averaging about 22.1%, with the average stock at about 7%, so the revenue growth is almost triple the average stock out there. Years to pay debt, 0. This company has no debt, so we don't have to worry about rising interest rates. Now, let us look at these colors, and top green colors are the strong buy signals. The lighter green are buy signals. The yellow are hold or equal weight in the portfolio. And this little color down here is a sell signal. And these people right down here in January that had a sell signal, well, back in January, the stock was at about $160 a share, and now it's at about $186 a share. So these people that said sell were on the wrong side of that trade for sure. And over 1 year, we see the stock just came screaming out about 8 months ago and then fell dramatically and has kept pace with the S&P 500 ever since. So with the S&P down about 7 or 8%, this stock was down 5%, but it's up another 3% over the past couple of days because I took this chart on Thursday and we've gained a couple of points, more than a couple of points since then. So over 1 year, it has kept pace with the S&P, actually outperforming it a little bit. Over 5 years, we are looking at the S&P black line up about a little over 50%, and this stock up a little over 150%. So 3 times the average stock for VEEVA. Now, when we look at this stock, we can see going up, higher lows, and the blue line is the 50-day moving average. This red line is the 200-day moving average. And as I mentioned, since I put out this chart, or I copied this chart on Wednesday, this stock is up about $100 to $186. So it seems to be holding this red line, which is the 200-day moving average, nicely. So we like that. We like what we see in VEEVA. And I want to show you something. Over 5 years now, this small part here is 2023, 2022, 2021, 2020, and this is 2019. So the high in 2019 was about $180 a share. So I want to show you something. In 2019, this company made $2.19. Well, for 2024, not shown, it's supposedly going to make $5.25. So we are looking at more than a doubling, almost 2.5 times what it made in 2019. So if we go back to the chart, this was the high point in 2019, and it's at about that point, a little above that point right now. So if it's making 2.5 times what it made in 2019, we can see this stock not only should get to $360, which is double the price right now, but we're looking at around $400 by next year. So this stock has a lot of room to run, considering what it is making now relative to what it made in 2019. So we like to see charts like this because we know that one day the market will totally recognize this stock and we can get some serious upside movement on VEEVA. So yes, we like VEEVA and it is in our growth portfolio.
Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep those questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.